My hands supposed to be here. I'm not sure what to do with my hands. I get so many people giving me feedback about my hands, so I'm going to try to keep them out of this video here. Welcome back. This is Jason Samard with the Sims Real Estate Group of Remax Nanaimo, and I'm here to bring you more value. I've got a guest today, actually. I brought Brent Rushton with KMA. He's a chartered professional accountant here in town in Nanaimo, and he's going to bring us some really good tax planning advice. I get the question a lot. People ask me about investment properties, which, by the way, I think are a really, really good thing to look at right now, especially in the Nanaimo market. But I wanted to talk to Brent about some of the advantages that people might find tax-wise when it comes to rental properties. So Brent, welcome.
Thanks for having me, Jason. The biggest question that we have with individuals who have rental properties is what can we deduct? Basically, anything that's used for the property during the course of a year for rental purposes, you can deduct. You can deduct your advertising costs, management fees if you have a management company, insurance, property taxes, interest. Now, if you get a mortgage statement, the annual statement shows your principal and interest portion of the payments. You get to deduct the interest part of that. You can deduct your landscaping costs, utilities that you pay for the renters. Sometimes when you have a split level house, an upstairs and downstairs, or any kind of a rental suite, generally you prorate the expenses that are for that one property. So if you have insurance for one building and your rental suite takes up 60% of the square footage, you would deduct 60% of that property. One thing I'd also like people to be aware of is you want to be tracking all of your costs for the date when you do sell that property. Like right now, the Nanaimo market is really hot. If you sell now, you want to make sure that you know what you paid for that property. You've got your initial purchase price. Each year, if you do renovations, you want to be able to go back and see what you paid, because that's all tax deductible.
Okay, good point. Now, common question that I get, Brent, is if I do renovations to my rental property, I can write that off. Can you explain what can and can't be done there?
It depends on what the renovation is. If you're just restoring the property to its original condition, then you can completely write that off.
Okay.
But if there's an improvement, you increase the value of the property, they treat that as a capital expenditure.
Okay.
And then you can't deduct it until you eventually sell the property.
So if I'm hearing you right, if you're maintaining the property that's there, you can write that off. If you're adding value by maybe adding an addition or something, that wouldn't be tax deductible.
Exactly. That's the perfect example.
You know, Brent, thank you so much for joining us on our videos here. And I just want to put this out there. For me, anybody that knows me knows I'm not a jack of all trades. I really believe in specialists. Get a good accountant, somebody that you can trust that can give you the right advice so you don't make common mistakes that I see all the time. So Brent, fantastic guy. Thank you so much again for joining us. Stay tuned in a couple weeks for another handy video.